name is Susan Jennings. I'm Executive Director of the Arthur Morgan Institute for Community Solutions in Yellow Springs, Ohio. And I'm here with Megan Bachman, who is editor of the Yellow Springs News, and our interviewee, Michael Shuman, who is an author, an attorney, and an expert in relocalization. Michael, we're talking to Michael because he has some familiarity with Yellow Springs, having done a couple of workshops here in the village, but he also is known internationally, again, as an expert in relocalization and helping to raise the conversation of local investing and the new economics. And he's the author or editor of 10 books, or now 11. He's going to talk a little bit about his new books. One of the most important to me is Local Dollars, Local Cents. How to Shift Your Money from Wall Street to Main Street. This was published in 2012, and even in that time, which is 8 years ago, he was able to write that localization was one of the fastest growing, most powerful movements of our time. And now it seems to be even more so. So good morning, Michael. Thank you for joining us.
My pleasure.
So I think most folks who are watching this are familiar with the term community resilience, but maybe you could just ground the conversation a little bit in the idea of new economics and relocalization. How are those intertwined?
Well, I think they're all, in a way, part of the same thing. And when I think about the principles of economic development today, they're largely about how to attract outside companies. And there's a belief that the ownership of those companies, and typically those outside companies are owned by other people globally. And there's an understanding that the ownership doesn't matter. There's a belief that the underlying social performance of the company is a drag on its bottom line profits. So there's always a tension between environment and labor on the one side and economic prosperity on the other. And there is a desire to shape public policy around those ideas. And I think those of us in the relocalization movement and the new economy movement have basically said every single one of those ideas is wrong. That we should be focusing on local self-reliance, and that we try to help those companies become better social performers. So we're very much looking for not one, but multiple bottom lines on labor, the environment, community. And we are interested in a public policy that nurtures local businesses rather than simply makes a community open to outside businesses.
So how do you differentiate that investing between Main Street and Wall Street, and how do you actually accomplish that?
Well, so first let's give a little bit of background about what the investment picture looks like. Before COVID-19, the American public, households and nonprofits had something around $85 trillion worth of assets. And of those assets, you know, a chunk is in housing and cars and computers and things like that. But a big part of the assets is what people have in finance. And so about 8-9 trillion of that is in banks. And a remarkable 56 trillion is in what are called securities. So securities are, you know, the simplified way of thinking about securities is they're pieces of paper that pay a rate of return, so a stock or a bond. So the $56 trillion that are in securities are in insurance funds, pension funds, mutual funds. And what is remarkable about that money is that even though the US economy is 60 to 80% made up of locally owned businesses, if you look at jobs and output. And these businesses are highly competitive and very profitable. In fact, more profitable than larger companies. Despite all of that, Americans have put almost 100% of that $56 trillion into Wall Street. So my argument is that actually about 60 to 80% of that money belongs on Main Street in locally owned businesses. And taking just the lower number, if you took 60% of that $56 trillion, it would work out to more than $100,000 per person. So, you know, it just, when you start thinking about what kind of stimulus you could get if you started to shift people in your community from investing in Wall Street to investing in local businesses, it would be gigantic. I mean, even in a smallish town like Yellow Springs, it could mean $1 billion of new capital coming into the community. It is impossible to think of another kind of stimulus that would be as powerful as simply shifting the behavior of the investors who live in your community.
So Michael, I appreciate the conversation around local investing, and certainly that's what you've advocated when you've been in Yellow Springs, and we have gotten a start as a community in local investment, and including the development of a CDC. And there's a lot going on post-COVID, but there's also the challenge now that our businesses, you know, like small businesses everywhere, have really been impacted, if not hammered, by the shutdowns. And at the same time, organizations like Amazon and big tech are really thriving. So does that change the equation in terms of how to think about local investing?
Yes, it means we have to do it faster and more conscientiously. I mean, one way to understand Amazon's success is that it has been the beneficiary of literally tens of billions of dollars of government support. Some of that support has been overt in states and cities paying for warehouses and other distribution centers. Some of it has been more in the background because states were not charging appropriate sales tax on Amazon sales. But, you know, whatever it is, the point is that public policy choices have driven a lot of Amazon's success. And resetting public policy appropriately is a way to help ensure that local businesses thrive. So, you know, I think to answer your question more directly, I think that all of us should couple of local businesses we really love and care about and support them, embrace them as much as possible in at least, I don't know, 2 or 3 different ways. I mean, one way would be, and I did this with a favorite business in Washington, adopt it. So one of my favorite businesses is called Busboys and Poets in Washington, D.C. And I approached the owner, Andy Shalal, and I said, look, I know things are really rough right now. I would estimate that I buy $1,000 of meals from you over a year. How about I just give you $1,000 up front and prepay for my meals next year so you have the cash flow to support retention of your employees? And he was so pleased with my offer to him, he gave me not $1,000 of gift cards, but $1,200. So I got a 20% rate of return on my investment, which, by the way, stands in contrast to most of us who lost 20% on the stock market in the same period of time. So I think we should all, you know, with whatever we can afford, we should prepay at local businesses we love. That's number one. Number two, we should try to get all of our local businesses onto some kind of web platforms so that we are encouraging larger numbers of people to do this. So one web platform out there that's worth looking at is called Local Futures, produced by a company called Protegra in Winnipeg, Manitoba in Canada. So, yeah, it's not enough if one person ponies up money in advance, but if you can get 1,000 people in Yellow Springs to do this kind of behavior with 10, 20, 30 important local businesses, this could be really useful. And then the third thing is really thinking about how to move your investment into these businesses. Now, these businesses, by and large, are unfamiliar with the changes in investment law that make it easier for them to raise capital from grassroots businesses. 10 years ago, it might have cost a business $25,000 to do the legal work to take a penny of investment from an outside grassroots investor. Now, that business, for very little cost, can post an offering on one of 30 different federally licensed crowdfunding websites, a site like WeFunder, and then invite their fans or their customers to come to that site, and they can get a loan or a stock investment or a royalty arrangement up to $1.1 million per year. And this has really taken off. I mean, as of, again, sort of pre-COVID statistics, the total amount that Americans had invested in local businesses via crowdfunding was about $400 million. The average investment was about $800. 60% of those companies that put issues onto these crowdfunding sites were successful. And by far, the most successful entrepreneurs were women and people of color. In other words, those who the current marketplace overlooks. So I think there's an education that we need to undertake of local businesses, that these kinds of investment opportunities are out there. And even if they're shut out at a bank, because banks like to deal with bigger, more established businesses, they can go to their customer base and find finance that they need.
Well, those are some wonderful ideas, Michael. I'm curious, since you've been to Yellow Springs, how many times? 3?
Oh, at least.
At least 3 times.
5 or 6.
Okay. And I know that you've done some studies into our local economy and places that, we might think about investing. If you can remember what would be some of the more fruitful avenues for us to look at? I mean, should we be looking at local food? Should we be looking at local currency? What kinds of places do you feel like we would make the most impact?
Yeah, so I think there's a bunch of questions in there, really, because the first thing that people should be doing local investment in is themselves. And local investment is not just investing in other projects or businesses. It's actually getting your own finances together. So today I posted a blog about an experience that I went through 12 years ago that for me was a real teachable moment in how to think about local investing. And that moment was, I divorced, I lost employment because of that economic crisis, and it was a real financially difficult moment. I decided that through my divorce, I would try to pay all of my debt. And my then spouse had a pension fund. She transferred half to me. And then I decided to take that money out and settle all my debts. And because it was a court-ordered distribution of assets, I wouldn't have to pay a penalty. I knew I had to pay taxes. What I didn't know, and none of the attorneys involved with me told me, is that that distribution pushed me into a significantly higher tax bracket. And so what happened is for the next 5-6 years, I was saddled with more debt than I had to begin with. So it turned out to be a really dumb thing to have done. What I should have done, if I had known it, is I could have transferred that money into a solo 401k. So a solo 401k is a pension account that you can set up for yourself if you have any self-employment income, which has been true throughout my professional life. And with a solo 401k, you are able to give yourself up to a $50,000 loan over 5 years that you pay yourself back at about 5% per year. So what I could have done is I could have taken a $50,000 loan. I would have paid off all my credit cards, all my other debts, and I would have paid myself back. I would have paid the interest to me rather than to MasterCard and Visa, and I would have prevented an enormous amount of leakage, tens of thousands of dollars that left my community in interest payments to these outside credit card companies. I learned a very important lesson, that investing in yourself is the single best payoff that you have for improving your economy. And out of the COVID-19 crisis, people are going to be more significantly in debt. People are going to be in danger of losing their houses. And thinking about how we can invest in one another with our pension funds is a pretty critical first step in stabilizing our economy. So that's number one. Number two, I would look at established businesses before I invested in startups or any new glorious projects. And I know you have many glorious ideas about great projects to do, but businesses that have been around for 10, 20 years, that have established managers, business practices, you have confidence in them, those are really the things you should be investing in first and foremost. They are the least risky, and they are the most likely to pay good rates of return. If you exhaust all of that, if you feel like, okay, we've given all the money we can to get people living in Yellow Springs in good financial shape, and we've supported the businesses that exist, then you can start looking at what's the next generation of businesses that's worth looking at. And I think for those kind of riskier investments, it might be useful to set up a local investment fund so that you're not investing in one thing, but rather in a diversity of things. So some colleagues and I just put out a handbook on the creation of local investment funds January of this year. And it's really been interesting because these funds are now focused much more laser-like on economic justice and racial justice kinds of issues. Some of the funds are focused on food, but I think you want a good manager who runs these funds to kind of curate where the investment should go and to create a diversified portfolio. And then investing in those funds is going to be less risky than investing one-off in these big projects.
Thanks for that great advice, Michael. Would you like to talk a little bit about your new book?
Yeah, so the new book is really, it's called Put Your Money Where Your Life Is. And it's really all about how to use self-directed IRAs and solo 401ks for local investing. It's all about how to prevent people from repeating my stupid mistakes of the past. And, you know, I sort of recap in there why local investing generally is good for your community and what changes in the law have facilitated it and how people should think about returns and risk. And then I lay out a dozen different types of local investing. We've talked about some of them so far today. And then the details about how you set up these, what I call do-it-yourself accounts. And if people are interested, besides the book itself, they might look at a website called thenextegg.org. And there's a group of us who have been basically trying to educate one another. At this point, we represent several hundred people who are creating these accounts and trying to figure out this universe of local investing. I mean, the truth is that this whole the whole infrastructure for local investing is very immature. And even though I think you can make a strong argument that well-chosen local investments are going to deliver better returns and lower risk than Wall Street, it's still hard to find them. And it requires some work. It maybe requires putting together some investment clubs or organizations in your community so people are working together. And it also, I think, over time is going to require some legal changes. And I'll give you a couple of examples. In the province of Nova Scotia in 1998, so it's a 1 million person province in Canada, they changed the law to make it easier for grassroots groups to create neighborhood pension funds. And they even give people tax advantages to participate in these funds. So there's now 60 funds in Nova Scotia built around particular community issues like food and energy and housing. Another example is in the neighboring province of New Brunswick. They have a 50% tax credit for people who invest in local business in New Brunswick. The state of Michigan just introduced a law in its legislature to do the exact same thing in Michigan post-COVID. So again, you would get 50 cents off of your Michigan state taxes for every dollar you invested in a local Michigan businesses. I think that's the kind of stuff we need to push money in the right direction at an emergency speed like the COVID-19 calls for.
Yes, thanks for all those both investing ideas and policy ideas. And people can read about them in newegg.org. Is that the right?
So Nextegg, N-E-X-T.
Nextegg, okay.
So Nextegg and in my book. And I also am doing a weekly blog on pieces of the book. And people can find that at michaelhschuman.com.
Great, thank you. I would really encourage folks to look at Michael's website, and also there's a number of talks that Michael's given that are posted on YouTube. So check them out. And we hope to see you in the Village again very soon, Michael. Thanks for joining us today.
I love the Village and the Village people.
Thank you, Michael.
Thank you, Michael.